Hey, welcome to the Closing Beat, everybody. Happy Friday. How's it going today? Hope you're having a good day. Hope you had a great week, actually. This is just a quick show that we do. We call it the Closing Beat. It's a fun, quick show to kind of go over the stock market, the good, the bad, and the ugly. We'll give you some stats today because it was a rather sort of a slower news day. We'll go over everything. And then, of course, at the end here, if you have questions and you're watching us live on YouTube, you can ask some questions. We'll be happy to address those for you, the ones that I can anyways. We're also playing a game. It's called Guess the Dow. Bottom right-hand corner of your screen, you can go to that website there and place a guess. And I think as you guys have figured out by now, there's like zero marketing involved here. There's just no... actually, today is a good day to share that with you. You actually fill out a form on our website, and we're using that form for other things. We've built our own custom sort of forms in the background, and we figured that rather than ask you guys to test it, let's just give people $100 to take their guess using the form. So while you're taking a guess and you're getting a shot at maybe making $100 there, we're actually studying the data so we can improve the other forms that we have here at Jazz Wealth. So sort of a sneaky, selfish reason, and because of that, we're not using it for marketing. We're not using it for any other sort of reason other than our information on the back end to help us improve our offerings here at Jazz Wealth. So you're free to take a guess. We won't send you any marketing of any kind. And on Fridays, we announce the winner. We have a winner, and this was really cool because at the last few minutes of the day, there could have been as many as 5 different winners. They were that close in guesses. To give you an example, or to tell you where everybody landed, only 20% of the guesses, exactly 20%, were lower than where the Dow closed. That means that those of you last week that placed your sort of guesses thought that the Dow would actually fall that much. Only 1/5 of the people that participated, we had over 500 guesses, by the way, only 1/5 of the people actually thought the markets would fall. So our winner is David McDaniel. He is not a customer. We're going to send him a $100 gift card. We've already reached out to David to get his address so we can send you that gift card there. His guess was 25879.18. And Mr. Wayne M knows who he is. You were that close, man. You were like right there at the end of the day, almost the winner. And at one point, we're the winner. But the closing price, 879.18 as used. We use FinViz for their closing price there, and so they were the best, closest guess without going over. And like I said, 80% of you actually thought the markets would be higher, and I don't blame you, right? What a wild week we had there, and we'll go over it here, of course. Last night we did our class on Nest Egg, cash flows in Nest Egg. That's the financial planning software that we use with our customers here, and you guys are going nuts with it. So look, our customers are going crazy with the idea of fine-tuning their net worth, their investments, their finances down to the penny. In fact, I actually just got done modeling a Roth conversion for a customer where we actually drilled down to the penny and which years they should do conversions and exactly how much, so they would actually end up paying less tax in the future or overall and pay and have the biggest net worth. So it actually goes that deep. I had a great time with that. That was actually a really detailed sort of thing that we worked out there. And that's what we do here at Jazz. We really want to help you with your net worth. See, if you have millions of dollars, then you get this help, right? There are advisors out there that deal with the high net worth, and they'll do that for you. But we've decided we're going to do it for everybody. So if whether you have $1,000 with us, $100,000 or $1 million, if you want to be a part of that and you want to actually have us dive in, I'm happy to do that with you. And so we're going to keep those classes going. I've already started working on our next class for the Nest Egg there because boy, you guys are going crazy with this. We have more requests for different scenarios and help me set this up and that than we've ever had. So we're going to keep focusing on that. Make sure you guys get your dough straight. We want to get you set up there. Let's talk about the markets. We got the Dow higher by 306. It's a big number after a week that we've had here. We got the S&P with 41 and the NASDAQ adding 129 on the day. A little bit of a recovery as we go into the end of the week, and let's see if we can just dial this up. We had a rough week overall. Today was the really sort of the theme of today was, we call it oversold bounces, right? So if we go look at the S&P on the charts here, we just got a lot of oversold bounces across the board between the S&P, all the sectors. By the way, every industry group in the S&P was higher today. There's 24 of them, by the way. They were all higher on the day, and so we've got this little bit of a recovery. I'll use the SPY since most of you guys like to use the ETFs to follow along. This is the index directly. Let's go over to the SPY. There you go. So you got a little bit of a recovery today. We've been mentioning the idea of this chopping around inside of a range, and I've even illustrated on the S&P futures here to show where the 10% drop is from highs. So we haven't quite made it down there. We're just chopping around between the most recent high when we talked last week about the market stopping at that point. Very much, I mean, to the word on our closing beat show, we pointed out this is it. You don't expect the markets to go further until we take a break. Well, unfortunately, it was quite of a large break there. We don't like to see that. But basically, we have a lot of chop, just going back and forth there inside of a range. A lot of investors, a lot of traders, a lot of active investors basically are just saying, okay, I see that there were some oversold stocks. I see the opportunity there to go ahead and maybe pick on some things that fell, a little waterfall drop. I pointed out a few of them for you over the week here. But a lot of people saying, okay, I need more information. If I'm going to come into next week bullish or bearish, I got to see something. Give me something to believe that. And unfortunately, the way we finished the week here was, well, the bulls sort of regained control. The bears did not maintain control. And so we're sort of at this middle point of the tug of war here. And you got people going, well, I guess I'll wait and see what happens. So if you're a longer term investor, you absolutely want to just kind of sit back and watch and see what's going on, given how choppy it's been. Volume very much increasing. We covered that in our last monthly update for our customers on how that happens here as we go through August and into September, how the volume actually creeps up and you get a lot more fluctuation there, which is fine for most people. If you have a long time until you need the money you're investing, you don't mind the volatility as long as the returns are justifiable relative to the volatility you're expecting. If you're retired or very close to retired, then you really shouldn't be seeing a lot of volatility in your accounts. If you looked at your 401k, your IRA, or Roth or whatever this week and you go, oh, that scared me, right? That was a lot of back and forth there. Then chances are you're just being a little aggressive. You might want to get someone to fine tune that or dig in and do a little bit of a homework there, do a little homework, see what you can come up with there to kind of ease that volatility. What I want to point out here is notice how we stopped at the halfway point. As long as this stays up here, you look about halfway between what happened on Wednesday and where we closed today. That's a very much a mental, psychological area where people go, I don't know who's in control. On Wednesday, the bears felt like they had this whole thing in control, and there's no question about the direction of that day. As we go into the end of the week, we've now recovered about half of it, just a touch over half, and that leaves people wondering, should they continue to dive in and keep going there? So if you look across the different sectors, that's what you're going to see is a lot of indecision going into next week. I think that's totally fair. If we look at the bonds today, they took a break. Bonds actually pulled back a little bit. There's the long-term 30-year bond. Here's the short-term 10-year bond. Got a little bit of a break there. The spread between the 2-year and the 10-year, there's been so much a focus this week, widened out to 6 basis points. So remember, we were 6 basis points from inverting. We were then 2 basis points. We then inverted briefly and closed 2 basis points in the positive. We then now have finished the week essentially where we started in the bond market, spread by 6 basis points there. So you get the idea of what's happening in the bond market, sort of an overreaction and then an well, I don't know if you call it an overcorrection, but at least a correction in that inversion. So we are not inverted at the moment. We were only inverted for just a brief moment in time the other day, Wednesday to be exact, and that's where we've landed. Next week, we got a lot of excitement. We got Jackson Hole. That's where the Fed gets together with a lot of people from around the world, a little media in there, some analysts, and to basically share ideas and thoughts about the world's economies, interest rates, finances in general, and the main focus is going to be on the president, Jerome Powell, not the president of the United States, the president of the Fed, Jerome Powell. The main focus is going to be, do we get any sort of hints from him, anything at all that leads to us believing there will be more rate cuts? Anything? We'll find out next week, of course. Traders in the bond market are expecting a 100% chance. They're actually making bets that there will be a definite interest rate reduction going into the September meeting. Well, we don't know. We'll look for confirmation on that next week. Of course, if we get any of that from Jackson Hole, expect to hear that word. That's your drinking game word for next week, Jackson Hole. If you're watching financial media and you took a drink every time they say Jackson Hole next week, you're probably not going to make it to the end of the week. So just so you know where everybody's eyes are going to be focused on. Earnings season is all but over. Walmart wrapped everything up. We still have some retailers out there to report. Retailers always come last because the end of their fiscal year is at the end of January. So they're the last to report in this sort of in the earnings cycle there. And they do that because of Christmas, the Christmas holidays and everything. So that's intentional. Let's see what we got here. Let's move on through the markets here. We'll keep this a short one today if we can. In the Dow, we're officially down 1.75-ish% on the week, so not really that bad. If you happen to be over here, I'll use the DIA. If you guys want to use that as the ETF, you look at the Dow. Still down 1.75% on the week. I noticed 3M was your leader today. I've seen comments before that some of you guys are trying to pick the bottom on 3M. Today was helpful, maybe. 3% bounce there. And we've been sort of looking at Pfizer throughout the week, this oversold sort of sell-off, showing us the relative strength the other day, and that is starting to recover there as well. So looking good there. We'll look at the NASDAQ 100. If you look at the NASDAQ, we're down about 0.5% on the week. So after all of that, we're down about 0.5%. In fact, after all of what we've seen over the last 2 weeks, we're down about 0.5%. So it's really just giving you this indication that very visually you can see we're in this choppy mess here. And of course, if we look at the S&P 500, the S&P finished lower, it finished lower less than 1%, like 0.96% or so. So after all that activity, down by 0.9-ish%. Don't hold me to that. 70% of the S&P 500 today was higher by at least 1%. So a lot of times I'll share with you like when the markets are higher or lower and sort of what went on underneath the surface. 70% of the S&P 500 higher by at least 1%. That's a pretty strong day. I mean, that doesn't happen all that often, especially after what we saw on Wednesday. So there you have it for that one. As far as being down from the highs, only 4.5%. So this pullback so far, now 3 weeks in the making, we are down or we have lost on the S&P for the last 3 weeks in a row. So if you're an index fund investor in the S&P and you're wondering, what's going on? I see the back and forth, but I'm still down 3 weeks in a row. Well, that's because that's what the S&P 500 has done. So that's that one. As we mentioned in the S&P, all 24 industry groups were higher on the day. 94% of the S&P 500 was higher by some amount today. So really, really good there. And look, every area of the bond market is extremely overheated, overbought, overextended, however you want to say it. You can see it by just looking at any bond chart here. Let's use an ETF so you guys can play along. If you look at the TLT, these are your long-term bonds, very much extended. It's had a great run to the upside. What a difference the markets can have when they take a little bit of a break. Bonds take a break, stock market gets a chance to make a little bit of a move there. In the short term, you could use the BIV. If you like looking at that, that's a Vanguard product. Also overextended here in the short term. Those are your short-term bonds. If you look at Treasury tips, if you like looking at those of you that do pay attention to those, that also took a break, very extended in the short term. And then if you look at short-term corporate bonds, let's use IGSB. How about that one? There was an old one I used to use, no longer available, I guess. IGSB, this is going to be your short-term corporate bonds, also extended here in the short term. So everywhere overbought in the bond market. If you're chasing bonds, you got to ask yourself, why? What are you hoping for there? Energy continues to be one of the more oversold areas of the market. I've been mentioning that one all week. Basic materials, XLB we could use. Also one area that's oversold in the extreme short term here. Those are your basic materials. I think I said that. Financials down as well. Notice how they hit the 10% mark. That's that black line on the chart there. They hit the 10% mark, and that's such a psychological level. People said, financials, that's a discounted area of the market. And you mean that the financials are discounted and I'm getting a 10% discount on price? Undervalued, underpriced. You get a reason for people to assume that 10% pullback area, hey, that might be a reason for them to go ahead and dive in. And not my opinion, you can see that they're actually doing that. So for the moment, the 10% pullback holding there for the financials. On the week, you got consumer staples, very, very strong, obviously finishing out the week strong. That is a lot to do because of Walmart. Walmart had earnings yesterday, did really well, and continued a little bit more of that here today. So consumer staples, in general, if you're sort of a little bit worried about the market and stuff, people do move over to consumer staples. And so that area got a little bit more oomph than you might normally see. XLP is the ticker symbol if you want to play along on the consumer staples. It's just one of the more popular ETFs. You don't have to use that one, but just one that everybody uses, and it's almost back to highs there. So XLP really strong on the week. Utilities, we've already mentioned this a million times. This driving you crazy yet? Utilities, again, one of the stronger areas of the market. That's just because of the declining rates, the rapidly declining rates. So utilities doing well. Semiconductors, we've been pointing out that it seems like it wants to either wait for this trend line here or pull back to it. I would maintain that comment, extend our line a little bit. You can tell that because there's just not a lot of activity here. I get it. There's a lot of news. Things are going on. But just nobody really willing to commit to the semiconductors. That's your AMAT, your Intel, your Xilinx, things like that. Nobody really willing to sort of dive in just yet, which makes you feel like if it fell, that'd get people excited. Otherwise, I don't know, you just don't expect a real truthful rally from here, given that it's not really near any support, or you can just tell nobody's really all that excited to be a part of it. And I get that the news, of course, has to do with that, right? Why would you dive into something like that if you don't have to? For any good reason, really. Transports, they also fell 10%. Look at that. Yesterday, right down to the penny. We talked about that yesterday. Psychological area. Got another 2% gain on the day. It helps that everything else was strong and sort of playing along with us here. But that 10% discount for people in this area, not the most undervalued from a price to earnings perspective sector of the market, but still looking pretty good there, down to the 10%. Got a 2% rally on the day. Got to point out retail while we're here. Not that you want to dive into this. This is a really tough area to be right now. But retail getting a little bit of a bounce, and a lot of names that are just extremely beat down saw a little help today, right? So keep in mind that could be a fake out again. You saw that there on Tuesday. It looked like everything was good, got some positive news out of the trade comments and stuff, and it still sold off on Wednesday there. So that's that one. For the S&P 500, you got 35% of the S&P 500 above the 50-day moving average right now. Remember, that was 27% yesterday, so a slight uptick, which makes sense because of the gain on the day there. You got utilities and retail have the most amount of stocks over their 50-day moving average, and you can kind of understand that just because those areas have done really well. There are 30 new 52-week highs today. Can you guess what names are in the highs? I got some stats for you here. Let's do this because I keep saying the same names every day. What are you going to do with these things? Public Storage, this is a REIT along with EXR, also a REIT that we've been talking about all week. We own both of them in our REIT fund here, and this is sort of an update to our customers here as well. EXR, we went back and studied this one here. When it has moves like it currently has, where it's just as extended as it currently is, looking out over the week, it's only positive 44.9% of the time. What's that tell you? Do you run for the hills? Do you sell your REIT fund? Do you just say, hey, Dustin, close me out? No, it just tells you that you expect to see this thing pull back, right? Whenever it's extended like this, it just lets you know that less than half the time does it continue. With those odds in your favor, you go, well, how bad does it get when it falls? Are we looking at a 5% drop over the next week? What's the sort of nastiness there? And actually, it loses just less than 0.75%, which tells you when this stock gets a little overextended, it likes to take a break, right? So if next week we don't mention EXR, PSA, or anything like that, you go, okay, I understand now from a statistical standpoint why it didn't do anything. There's no need for emotion at that point, right? Did we just fix that? Right? I love doing this with customers. Now there's no need to be emotional if things fall next week in the REIT category. You would know statistically it's supposed to take a little bit of a break. If you're looking at PSA, that Public Storage there, same thing. With it being as extended as it is, historically it's only positive 1 week forward from this very point, 34.8% of the time. So really about a third of the time does it continue to extend itself after it's already extended. So there you go. Same thing. Average loss for this one is just under 0.75%. I believe it was 0.70%. So let's just call it 0.75%. So now you know, right? How cool is that? If you could know those things ahead of time and you could know, hey, like Netflix when we talked about that, Juniper when we talked about that, Pfizer, we're talking about that one now. If you know what sort of the expectation is, you don't have to get them all right, right? Remember we talked about Tyson. Or no, McCormick. McCormick was the one that didn't work, right? So, or NVIDIA was the one that didn't work. So when we talk about that, you know that statistically you have the advantage if you can just weather through the ones that don't work. It's pretty cool. I don't know. I'm into that. If you guys aren't into that, that's too bad. We're going to keep talking about it. Other 52-week highs today, consumer staples related, General Mills, symbol GIS if you happen to be participating there. 5 new lows on the day. They all finished in the green, by the way, so it was just like a little poke to lows and then back higher again. You got Fox, Mohawk, and Mosaic. Well, let's go back over here. Fox, Mosaic, and Mohawk, and then Juniper was on our list yesterday. Should be coming up. There you go. So Juniper on the list for being extended there. Yesterday, already starting to recover 2% for those. So again, the oversold areas of the market, the stocks that just sold off like a waterfall, starting to recover a little bit today. It's nice to be able to see those. Let's go to Netflix real quick because that came up on the radar today. Netflix is now extended again, oversold in the short term. You got a 75% chance that in a 1 week time period, you will have at least a 2.3% rally. I find it interesting that we looked at those numbers today, and what did it gain today? 2.38%. So technically it's already done it, but it lets you know that going forward, you expect a bounce. If you own Netflix, you're excited about that. You have a chance for a rally going into next week where the odds are in your favor 75% of the time. So that's pretty cool. Those are the stats I have to share with you today. Tapestry, it actually finished positive on the day. It was downgraded twice, and Goldman Sachs had it on what they call their conviction buy list. A conviction buy list means that they are extremely excited about the stock and they think that it's going to go higher. Again, they don't get them all right. You know, they do the best they can with these. They, of course, want to give the best advice to their customers. They got this one wrong, and so they took it off their conviction buy list. Anytime Goldman takes something off their conviction buy list, which they did this late yesterday, actually, after hours, usually it's not a good sign, right? People look at that and they say, well, okay, if the best and smartest people in the room don't feel strongly about the stock, then why should I feel strongly about the stock? And so, well, there you have it. General Electric. Remember we talked about what happened to General Electric yesterday? Well, they fought back today. That old short strategy that Mr. Markolopoulos or whatever his name was, didn't seem to work out. CEO came out and said, you know what? I'm buying $2 million worth of shares because I know our accounting is not wrong. And so basically the stock had about a 10% gain on the day because the CEO says, well, I'm diving in. I'm buying shares. That was probably the smartest thing he could have done versus like going on TV and saying, no, we're fine, everything's good. He put his money where his mouth is. He didn't even have to open his mouth. He just put his money out there. So stock was higher today, which is a good thing because did a little research on this one. Since Larry Culp took over for GE, Fidelity and T. Rowe Price have been massively adding GE shares to their target date funds, to a lot of their funds in there, and it hasn't really been going all that well for them, so it's a good thing. If you have Fidelity funds or you've got some of these target date funds that you're participating in through T. Rowe Price or anything, you know, and their other funds and everything, you probably weren't too happy about what happened yesterday, but hey, you know, same thing. I mean, some of these are going to struggle, but overall, those are two good companies. I'm not saying anything bad about them, just it's not going too well for them. And what else? A couple other little bits of news, and then we'll take your questions if you have any. You like Disney World? I like Disney World. So Disney World came out with a perfect pass for me today. If you're willing to go to the park after 12, you can actually buy a 2-day park ticket for $88 a day. Now, that doesn't sound very cheap, but it's actually really cheap because for me, a Florida resident, someone that wants to buy a 1-day ticket, it's $109. So a little bit of savings there if you're willing to go after 12, and sometimes those parks are open until midnight or even later. They didn't do that this summer. I don't think it's a summertime thing, actually, but sometimes they're open pretty late. You can actually see it on their app. And then finally, JFK. Ooh. If you are flying into or out of the country from JFK right now, you are not happy. Severe delays there apparently because their customs system went down. Ouch. They said they're doing it manually. So they're sort of processing people manually. Ooh, boy. That's not good. All right, let's take a look at your questions here, and then we'll wrap it up. If that's the end of it, we could see a rally till September if there's no more trade news. Well, we'll see what happens. Yeah. Bob says he's been frustrated with his financials. Nice to see a pop. I agree. It's a very discounted area, but it really hasn't grabbed the massive attention that it should. Interestingly, financials, if there is a recession, financials is one of the better performing areas. A lot of people go to consumer staples right away, and that's a great area. I'm not saying that's bad, but financials tend to hold up a lot more, especially in periods of lower rates in a recession there. So that's your stat of the day for that one, I guess. Tandra, do you think the market correction is over for now and heading higher? Any thoughts? We're really at the mercy of any one tweet, comment, or Chinese national news. So we'll see. My sort of feeling is that we're coming down to that 10% area. We're going to knock out that 10% pullback. It apparently is not going to happen all in one fell swoop. But we'll see. I mean, really, it's a very news-driven market right now, and the volume is coming in more and more because people are coming back from summer vacation. So we'll see. I hope attendance is down. I've been trying to go to Disney World for like the last 4 or 5 months here, and you can kind of tell if you're a Florida resident. You can kind of, there's little tricks and things you can tell to see how busy they are, or you might have friends that work there. I don't know. And yeah, it's just busy. The hotels are all booked up. So maybe that is the case. I would love to go back there. I would go there all the time if I could. I mean, it's just, I should probably work there. Going there with 4 kids, I don't know if you want to go there with 4 kids. That seems not only pricey, but that's a long day right there. What's the data on Disney's event next Friday? I don't have any. That's a tough one there because you can't, like, what do we model that against? California, when they open there? I don't know. California, by the way, that Star Wars one seemed like a little disappointment. Personally, spend that much money. George says, if stock market investments are soaring, why should anybody be concerned with national debts and deficits? Oh, I don't know if you must be talking to somebody else. That's I don't think I've mentioned that one. Where do you stand on that? Do you think it matters how much debt we have? I hear people saying we should have more debt. That it doesn't matter. Former Treasury Secretary. Eminem's headed for the Disney for his honeymoon in November. What a great time to go to Disney. You're going to love it. That's a great month. Man, just great weather and everything. That's perfect. You have a good time. Congratulations. Best time to go to Disney is the end of January. End of January, if you can go. Yep. Now, the hotels, by the way, they do their renovation. No, this is a side topic, but they do their renovations there, so you may not get to use the pool. It may be renovated or something, or maybe a building that's down, but who cares? It's freaking Disney World. Cool. What about Microsoft? What's the question there? Why consumer staples is high when no one shops at department stores? Well, consumer staples are not department stores, so you might have the wrong thing there. Yeah, not all department stores. Is it good to buy financial stocks now? If the recession on the horizon or rate cuts, financials big losers. Actually, like I mentioned, financials tend to do well during that time period. They're the 3rd best performing sector during a recession with lower rates, or of course they would also call that easy monetary policy. They tend to do well. So a lot of people run away from those, and I would think on the surface, yeah, all right, I should run away from those, but maybe we could do a video on that one because I did do one of those actually for customers. We went through all the different areas of the market. Maybe we'll do it again. Goalie says, how do you find you on Roku? Search Jazz. Well, it's actually on the Investors News channel. You can just load it up, put an app on there. I just got it on all my TVs there at home. That's how you find us. Yeah. Also some other good stuff on there as well. I've kind of been like checking in just to see what they talk about. A lot of other YouTubers on there, popular names and things. And it's on 24/7, so it goes around the whole world. Given the strength of the market, how bad of a sign is it when a stock sell-off today? Oh, when you see a stock in particular. Yeah, so okay. How bad is it when you see a stock sell-off like today? Okay, I got what you're saying there, Palo Alto. So not good. That's relative weakness, right? We pointed that out on Pfizer. We've pointed it out on numerous names to show when there's relative strength on a day when the markets are falling. People like that. When you see a name like today, I didn't catch the news on this one today, but when you see something like that happen and the markets are otherwise strong, and there doesn't seem, people are maybe frustrated by some of the recent turnover there. You got some top brass leaving the company there. Obviously, that's not good for the one-day sort of news there, but that's not really major news. So not really good in the short term for that one. I would think you'd have to expect lower prices there in the short term, if that helps you. But other than that, yeah, I don't really see any other news or anything. Yeah. It's funny. What's the best website to get updates on natural gas? The report came out and storage is more in full last week. You could maybe go right to the source as the EIA if you like looking at that. It's not going to be very pretty when you get that data, but you could actually just go right to the source. You could probably also use any sort of calendar system. There, I'm trying to think of the name. There was a currency one that they used. Forex. What was the name of that one? Forex calendar something or other. There used to be a great Forex Factory. They keep track of all the global news events and everything, and they actually track by results and everything. You might like that one. That'll definitely be on there. Yep. Comments on the old monetary policy. Yeah, when in doubt, just spend a little more, right? Let somebody else deal with it. All right, I will wrap it up there. I hope you have a great rest of your day. You guys are right. Just got some passing rain going through here. It's Florida, though, so it's like 30 seconds later. It's gone. Have a great rest of your weekend. We'll be back next week to do this all over again. Good job, those of you on the nest egg that are diving into that there. I would love to, I can't do this, but I would love to calculate how much money we actually have been saving people on their taxes, their retirement, their overall net worth. I wish there was a way to calculate that. Because holy cow, you guys are going crazy here, just dialing in, squeezing the last penny out of your net worth. I love it. I love it. I love it. We'll be doing more classes on that soon. Enjoy your weekend. Thanks for watching. See you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.